Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, and we're at the 6th of March, 2025. Well, I hope you had a good trading day because it's wild. That's putting it mildly. We've been in what I'll call a meltdown in the stock indices. They have been coming down hard, and yes, they're getting a little bounce tonight, but overall, you know what they've done. The markets have fallen out of bed. There's tremendous uncertainty about these tariffs. As you know, President Trump puts them on one day. The next moment, we're being told, well, they might be coming off. And later in the day, suddenly they are off. And then you hear, well, they're off, but they're not off. They're off, but we're going to redo the USMCA deal with Canada and Mexico, but they're off right now. I can go on, and you go crazy from it. I mean, and that's because the one thing the market doesn't like is uncertainty. Uncertainty is not bullish, it's bearish. Remember that. The markets like certainty, and they're not getting it at this point in time. I can give you the certainty, though, in the sense that I believe the president has engineered this. I believe the stock market down is a temporary phenomenon in his mind, okay? I believe that it's to get interest rates to continue to fall. I think it's with the Doge and getting rid of jobs and so on to get the numbers down in, if you will, the labor area so that the Fed takes notice. They have two mandates, inflation and full employment. He wants to make certain that the employment number is what they're going to start protecting. He believes his projects and what he's doing with tariffs and all will take care of the inflationary spiral. In addition, you know he's supply-sided, all right? So what he wants to do is get companies to move to America. He wants them to manufacture here, make as much money as you can, employ Americans, sell within America, build within America, and he embraces you tremendously. Number two, you don't want to do that, it's fine. Just don't put tariffs on your goods. If you put tariffs on your goods, you've got a problem. Number three, don't dump like China is doing their goods that there's no way. They're out when they do this to knock out the competition in other countries. But that's where tariffs came from in the first spot in order to protect at home, your home base of whatever you were out to protect. So to do away with all tariffs is maybe not realistic, all right? I mean, there are just certain things that you don't want to give it up. If you had no tariffs at all, maybe you'd have no U.S. steel. You'd have, and I'm not talking the company, United States, anywhere making steel. Well, what would you do for security purposes? That could get shut off. So you can go on and on down the road. It's not as simple as it looks. And that is one of the reasons that this thing's going up and down. Number two, I look at the gold market and I said to myself, you know, if you were to tell me in a scenario, the dollar has been coming down sharply, interest rates are down, and the stock market is given a monster correction, well beyond 10%. We're in correction territory. Some markets are flirting with bear territory, and gold's not rallying. The gold market isn't as worried about this scenario as it might appear. Maybe that's the calming factor. We're going to find out. You know, before we go to the chart, why don't we do this? Why don't we take a look, not at this one. I wanted to show this one. We're going to get information in the morning. And that information is the non-farm payroll data. Tonight, just so you know, and you can look at that, I do a full report tonight on the USMCA, so you get an understanding of the Canada-Mexico-US trade agreement, what qualifies, what percentage has to be made, the cost of labor to make something, what all works, so you can get that. And I put it together. I talk about the amount of goods tonight in my full research that let's assume these tariffs are now off, and I believe they are. I believe the president's back to the USMCA deal. What percentage of goods, as this ends, could be tariffed? Ms. Scheinbaum out of Mexico says Mexico doesn't have tariffs on the U.S. Well, that would be zero, in my opinion. The president, of everything I'm reading, they think about 50% of the goods. I don't know what's right and wrong. I know what she's saying. And so far, the president is giving her nothing but praise. Not the same for Trudeau. He can't wait to do this. Sunday, we'll see you, buddy. We won't have to deal with you again. Again, it's all wrong. These are our good friends. I don't believe in you treating people like that. I don't care if you like me saying that or not. They're heads of state. They deserve all the respect in the world, period. And our two biggest trading partners. All right. So the economists are forecasting 170,000 jobs compared to the 143 that we had as we sat back in January. We are looking for the unemployment rate to be unchanged. These are what the average guesstimates are. And the average hourly earnings up 0.3. They're looking for the credit numbers to go up only 14.5 billion. The month before, they had risen 40.8. So little less spending. We'll see if these numbers come in. I've seen people that say now that 170 is too high, and I've heard others saying that they expect the jobless rate to climb to 4.1. We will see just what it all is going to be. All right, let's go back to the chart that I had here for you. If you take a look, I pointed out yesterday and recently, in fact, this whole week, I said, we're not bouncing away the way that we did before. We only got slightly under the 18-day average. This was where the big bounce happened. And that is not this past November. This is 2023. And when the market came back, it never looked back again. This is the first break since then. And you've got to take this into account and understand what you're dealing with. So you're getting a liquidation phase that's going on. I pointed out to you and put this up this week because I said, if you look at that, you've made a top. And I had a line on here that I had told you was a rising wedge that didn't materialize and you broke out the downside. Instead of pushing through, when you go the other way, there's a lot of pent-up energy, a lot of money in play, and boom, the market is let go. We haven't been down to these prices. Now think about it. Here you are in November of 2024. So you've gone all the way back to the election time. So I think you'd agree with me that the Trump bid, the Trump money, he's going to win, we're going to have the election, that's out of the marketplace, at least in the S&P. The trend is down, lower highs, lower lows. You've had a bearish crossover, which often results shortly thereafter of new lows. You've already done them now. So you got the new low that we were talking about. You're underneath the 200-day average. Today's the first day you stretched your legs a little further away from it. Will it bounce back is going to be a massive question that we have to ask ourselves. If not, you could be surprised how deep this could go. When we look at the market going by the Bollinger Band, remember what I taught you and I keep telling you. Remember that word gorilla glue trade. It's when you latch on to this, and if you start the embedding process, you watch out. Now, in all fairness, this did not embed. Embed is when the numbers are going at least 3 sessions in a row under 20. Here's one. You didn't get it the day before. You can't count now today's because we don't know how it's going to finish. So it's just an oversold market that latched onto it. And the one thing I teach traders, because so often they'll look at patterns, oh, if I had bought that Bollinger Band, I got a big rally. Had I sold it, I had a big break. Okay, you bought it, and where the heck do you come out? It's not how you use this indicator. You play the percentages of what it'll do, and if a trade isn't there for you, you're not fighting the market the wrong way. It's generally an area to take money off the table, not add money to risk on the table. Do you get what I'm saying? And now we'll see what it does. When we come to the NASDAQ, it's the same thing. You're under the 200-day average. You've now spent almost the whole week under it. That's not a good sign. You're not bouncing back. We'll see if it can give you a snap. Are you embedding here? So again, you can't count tonight, but we can count Thursday. Both numbers were under, not both numbers under. Being on it's not the same as under it. So oversold market that we have there as well. Now we get into the Dow, down to the 200-day average in the Bollinger Band. It's the one that's paying attention. The others have given up on the 200 for the moment. This is the one that's paying attention. It hit it before with it, came back and is doing it. I give it credit, and this is probably the one most likely to give you the bounce first, but that's all that I could say. There's nothing bullish on the chart other than maybe short covering. The one that's the most bearish has the bearish embedded reading, the Russell. And until that red line closes over 21, rallies probably still get sold. I have been the most bearish person you probably have seen on TV, or because I am on TV, or these videos, as I have been adamant, you don't want to own Russell 2000. You've heard me say it over and over and over. Remember the beginning of the year, I want to own Russell is what I heard people saying. And I said, I don't get it. I don't see why. You now get it. When we see a sustained break in interest rates, the word is sustained, ideally the 10-year staying under 4%, my eyes will open up. But that hasn't occurred yet. In the 10-year note, you can see you lost the bullish embedded reading. Typically, before you go up and make a new high, price in the closest main moving average, which is now the 18, make a run at each other. Doesn't mean it has to. I'm giving you what I have learned over the years typically. Same thing going on in the 2-year, which would be down here. Get over these numbers, it doesn't work. And it's then telling you a story that even lower rates are coming because this is an inversion market. Right now, that's not what I'm seeing. In the dollar index, all right, you got down yesterday to the 200-day average of close. Eventually, I'd get to it. And the Bollinger Band extended a bit today. Oversold right by that number. For my money, I think the smart money's coming out of the dollar here. Not being bullish. No, don't read that in what I'm saying at all. I think you're looking for the market to climb. You're going to get another bearish crossover in the dollar. I look for it tonight when the market opens for the 18 to get underneath the 100. That's another bearish element in the chart. In the euro, I put it all together. Remember, 57% of the weighting of the dollar index is the euro. You're up to the 200-day average in the Bollinger Band. That's often a stopping spot there. In the British pound, if you go to the weekly chart, you see the upper Bollinger Band and why I'm thinking we're near a zone here that can get a little bit of a correction. I am not bearish the euro. I'm not bearish the pounds right here. The dollar's the one in the fall, and it's carrying everything else. And we had a big event. All right. When you see a watershed event, you've got to pay attention. What was that event in Europe? The U.S. is not covering them any longer for defense. The president said you either pay up and put your money in to get us to back you up, or we're not going to do it. Now, as they're running to do this, the president made a statement also. There'll be some countries, he said, that they don't meet the quota that they're supposed to. The U.S. will not offer them defense. Those that do, we will. So he's already getting what he wants, and I'm applauding it. They should be paying. They should have done it all these years. In the euro, so we got to the euro. So let's go now to the Bitcoin. Bitcoin, like gold, has rallied up into key resistance points and hasn't been able to go. Gold went to its 18-day average and this did. So, it's interesting. There's just been rallies in the market off lows that carried up, but they haven't gone anywhere. I am not saying they can't go, all right? I'm one of these guys that does believe that you're going to go much higher in these markets down the road. It's a matter of timing. Close back over all this, the 100-day average and the Bollinger Band, in the 18-day average, and I'll probably get friendly to the market because you already have the swing line up. On the energy market, the president's been after breaking this market. That's what he's doing. And you could see, now you're moving to the right-hand side. These prolonged breaks inevitably call for corrections, but the fundamentals in them have changed. That's what you have to remember. What changed in Brent? Saudi Arabia, OPEC Plus, going to produce more oil now. It matters not what the demand is. They're coming at the market with oil. They've given up enough market share to the United States. They want to claw back their market share. Damn B prices. Our WTI moving to the right-hand side. So you don't want to press when you're outside of the Bollinger Band. Let the market embed, and you hit the market on rallies. That's what I teach, at least. Not embedded here in heating oil, big break. And notice moving to the right-hand side of the band. And in natural gas, don't be surprised if this market starts rolling over and very shortly you're back here. That's what I am expecting. So we'll see. You had to get underneath 422.5 to get me even more thinking that the downside's coming. You haven't quite done it tonight, so we'll see if that happens. But if it does happen, I wouldn't be surprised then that the market wants to back off to that number. Now, a lot of this, if you understand the relationship of time and price, which is called the Arun indicator, I can help you understand it. You probably have this in your own software. It measures a number of periods, which are bars on a chart, since prices recorded a key day high or low. And then you're able to see what the market is doing. It's an indicator that will plot this, and you start seeing the width, the narrowness of it. Now that you have the definition, you move on to the videos to get the understanding. And I have 2 videos on this. I teach you in your charting software, not mine, how to set it up because you probably have it, how the indicator looks, what these points mean when the bands narrow, when they come in, how they crisscross, and what that means in the momentum. So if you're interested in learning another tool, this is free for you. All you need to do is go to iraepstein.com. that you see here, the Arun indicator. It's in the free offer section. You can move your cursor up there. I'm Ira. You have yourself a great evening, and I'll catch up with everybody in the morning. Take care.